Hey, welcome to the closing beat, everybody. Happy Tuesday. Hope you're having a good day out there. Welcome to the closing beat. Just kind of a fun show that we do every day to go over the stock market, teach you something new. And today we're going to do something a little bit different, per the request of some of our viewers yesterday. We're going to go through the November seasonality, however you want to say it, the statistical performance of the stock markets, and we're going to go over everything in the month of November, so stay tuned for that. If you want to see how we design like all that stuff and like got some of the decorations up there, there's a video on our YouTube. We posted it on Saturday. If you want to check it out there, it's kind of fun, you know, got a little thing going there. Almost killed ourselves, but it's all good. And we will pretty much get started. Hey, if you want to play a game, it's called Guess the Dow. You go to the website jazzwealth.com/guess the Dow. Tell me where you think the Dow is going to close next Friday. Closest without going over will win a gift card, $100 gift card, no strings attached. We will not email you or mess with you in any way. We'll just help you out there and maybe some holiday money if that's what you're looking for. Also, there'll be no show on Friday, so just 2 more days here to go with the closing beat. We'll see what the markets have to offer, and we'll take it from there. If you look on the right-hand side of your screen, you can see the stock market basically lower on the day. The NASDAQ did okay. The FANG stocks did pretty good there, so that helped out. But the market's a little bit lower, and if we go over to the charts, they're actually a little bit lower after hours as well, heading about 0.75% lower, just bleeding down further on the day there. No turnaround Tuesday. Sit. You got nothing. Senate has adjourned until after the election, so there'll be no stimulus. That's just not going to happen. So, which is fine. We weren't expecting that or anything. We've been talking about that. But if you look at the S&P 500, no turnaround here today. We closed near the lows of the day, and even after hours, selling off a little bit more. It's not a good sign. If you like a pullback, you're going to be excited by that. Pretty much a narrow range day until we closed. The day finished off pretty narrow, and then after hours, we're just selling off a little bit. I think you got Microsoft down just a touch with earnings after hours. Not too big of a deal there. NASDAQ was positive on the day. If you look at the NASDAQ there, that was the best today. It was largely thanks to the FANG names for the most part. They were the ones that helped out the really all the major indices today besides the Russell. Facebook higher on the day. I believe Tesla added a few points, about $4, up 1% on the day. Nvidia got some attention, bouncing off the 50-day moving average, looking pretty sweet there. And, you know, that's pretty much it. Some of the drags today would have been AMD. They're going to be buying out Xilinx. We'll talk about that a little bit later. Dexcom, which was one of the bigger gainers overall for the first part of the year, is starting to lose a little steam there. Down 9% today, back towards the lows. But other than that, the NASDAQ was pretty good. I got about a 0.5% gain on the day there. The Dow was dragged down just a little bit today. It's going to be because of names like Boeing. A little bit of a rollover there on Boeing. They have earnings tomorrow, by the way, right? Yeah. So tomorrow morning, earnings. So that could all be erased in one day. We'll see what happens there. So a little pre-earnings excitement. Goldman Sachs pulled back just a little bit, down 2.7% on the day. Caterpillar had earnings as well. That's a much-needed pullback for a stock like Caterpillar. In the Dow, one of the helpful names today was Salesforce.com. Popped above the 50-day moving average, looking pretty good there. In the Russell 2000, if you happen to be watching there, the Russell 2000 was held back today by the small cap value stocks. So if you happen to break it into categories there, which is fine. The Russell 2000 has been easily the best performer this month so far. Hasn't pulled back as much as the other sectors there, so not a big deal for the Russell. All right. On the bottom right-hand corner of your page, you can see some of our videos. Tomorrow, we've got an interesting video. I'm sure I'm going to get some political comments. It wasn't meant to be political. We're just going to talk about Biden's tax plans compared to Trump's and just go item by item. I think there's only 4 or 5 we're going to cover for your personal taxes. We got an election coming up, so just going to go over that so that you can see if you want to prepare. As a planner, financial advisor, we at least have to look on both sides. We got to know what we're probably up against, whether one wins or whatever. So I don't really care what happens, but we'll see. We'll cover that tomorrow. Friday, got a cool like strategy video on how to sort of maneuver some money there to avoid taxes, but not avoid taxes, but to legally avoid taxes and to actually get money out of your 401k. So I'll show you what we did with a customer there if you're interested. Also, can I just show you this real quick? Can I pop over here? If we go into the research site, I just want to point this out because I got a question on this one. If you're a research member or if you're a customer, you get this for free. But if you want to join, it's $13 a month. Just go to our homepage up at the top. You can click to join. But if you're joining and you're like, oh man, I need to catch up on some of this stuff, go over here and click on this eyeball. And what it'll do is it'll sort all of the posts by posts you haven't clicked on. So if you went on vacation or something, or you've been randomly clicking, what it'll do is just sort by all the ones you haven't seen. So I haven't clicked on our most recent one there because I wrote it. but you could click on that, and that'll help kind of fine-tune your views there. Had someone ask about that. They said, oh my God, a research site has so much stuff in there. How do I catch up? So just read what you want, then go click the eyeball, and you can check it out from there. Also, we're going to be working on the video to post to the research site. What happens to the worst performing sector year to date, which we know is energy, right? So I'll just share with that before we go over to that. Year to date, here we go. We got energy as the worst performing sector, down 49, almost 50%. What happens in December? Does it typically sell off even more with some tax loss harvesting in there? And if it does, what's the returns? What should we be worried about? Or if you're going to buy the worst performing sector, then will you be rewarded, right? Because we know from our other post in there, if you take a look at the worst performing sector at the end of each year, Cody did that post for us there, that you actually end up doing okay going forward. It's actually a worthwhile strategy to look at buying the worst performing sector. So that's that post in there. Cody did that. So I'm going to be posting a video to help expand on that. I didn't mean to go off on a tangent there. I'm sorry. I wanted to point that out. Let's go over to the sector breakdown here today and just dial into some of these things. You can see that technology communication services were your positive sectors on the day. You can also take a look by looking at our list here. About a 0.5% gain for both of them there. Industrials were the weakest down here all the way at the bottom, and soon those are going to be colored in red when they're negative, I'm told, and then green when they're positive. So we'll see what happens there. Industrials were the weakest on the day. You're going to see those all the way down there at the bottom. And it wasn't because of UPS, I'll tell you that. Do you see what UPS did today? Bam! UPS recovering off the 50-day, about up 1.5%. Was upgraded at UBS to $214. That's going to be off the charts, or $214 from $162. That's the highest price target on the street. They said their recent price cuts, he's catching up. The recent price cuts that they've done is going to meaningfully expand their profit margin. They got about a 5.1, 5.7% profit margin, net profit margin at the moment. So UPS having a good day. Based on that one there. Other than that, it was pretty much broad weakness across the board. You had JetBlue earnings come out that hurt American Airlines. American Airlines down 5% on the day. If you go over to some of the transportation companies like the truckers, Old Dominion was down a little bit on the day. Union Pacific, by the way, which is the railroad that sold off the most. If you happen to be looking at that, it's the largest pullback of the rails headed back to the 50-day or 200-day moving average. And just for fun, if you're interested, Kansas City Southern has pulled back the least. So if you're ranking them from relative strength there you go. And I got a fun fact for you. I bet you didn't know this. I might even make a post out of this to maybe get a little more detailed about this. What do you think? The railroad companies, they outperform the stock market. You know, they say you can't beat the stock market, man. You just can't do it. If you just bought the railroads, and I'm not like making this up, if you just bought the railroads, they have outpaced the S&P by an annualized return of 4.8% over the last 30 years. So that's not this year. That's not the last 2 years, not the last 10 years. In fact, the last 20 years, it was over 10% annualized outperformance relative to the S&P. But over the last 30 years, you would actually beat the stock market by investing in the rails. You wouldn't think so, because they're not a very exciting area to be in there, but nonetheless, that's what you have. All right, let's go over here and take a look. Financials, you're going to see they rank down here towards the bottom as well, about 1%, almost 2% loss on the day. Are they rolling over? Are the financials starting to roll over a little bit? You got some of the big names out there. JP Morgan pulling back, Bank of America, Morgan Stanley, they all just started selling off, and those are the bigger weighted stocks. Citigroup as well, hinting at making new lows. So I just want to point that out. The stronger areas, if you're interested, I always try to share that with you. It's going to be market access. It's going to be your exchanges. Market access, CBOE Group, as far as having a good one-day performance today. Intercontinental Exchange, although that one did fade away, so that one doesn't go on a list. MSCIB, the other one, up 2% on the day. Taking a look at tech. Tech is kind of in this pullback zone area where people are looking for maybe a buy there. I'll tell you, consumer staples will be in the same category. Maybe another down day or so, and that one pulls back right into the uptrend. Outside of the sectors a little bit, emerging markets, we pointed out last week, they're still up there at highs, looking pretty good. And home builders also. This is a clean pullback on the home builders there. Anyways, let's move on to the new highs for the day because I want to get into our sort of lesson for the day. New highs and lows. You got 11 new highs, 2 new lows. Wells Fargo was one of them that made a new low. Not good. New breakdown there for Wells Fargo. Xilinx, that one got a new pop today to 52-week highs. AMD is buying them out for some ungodly amount of cash. I forget. Anyways, up 8.5% on that one. Market access, we just pointed out a second ago, that was an interesting new 52-week high because it's a strong stock in a weak sector, but that stock happens to be in a strong industry overall. So if you're tracking that, you know I've been pointing that out to you over and over again. Danaher, the recent breakout continues, a little bit of a beast there. That's another new high. And Thermo Fisher, also one that we pointed out on the breakout, continuing to move higher, tight, consistent uptrends. You like that if that's something that you are interested in versus like the hockey stick or hockey shape type parabolic moves overall. Okay, here's what we're going to do. We are going to break the stock market down, and then I'll probably wrap it up. I can stick around if you have more questions, but I've got a lot of other things I could cover. Here's what we're going to do. We're going to say stock market performance in November. We're going to take it a little bit further here and sort of expand on what we've got. That is not the stock market. These are the sectors. Here we go. If you take a look at the stock market, and I'll go over here so you can see it a little bit bigger, we're looking at the month of November, and we are looking at it over the last 20 years to come up with some data and some statistics. So don't let all this scare you here. What we did is we put the median performance of the S&P 500, the Dow, and the NASDAQ, and we did it using the ETFs. So if you want to take a look, you can do that as well. So here you go. The median performance of the Dow over the last 20 years in the month of November, 2.96%, 2.67 for the S&P, 1.6 for the NASDAQ. If you take the average performance, just a little bit less there. The Dow and the S&P are on a 7-year win streak through the month of November. So in other words, the last 7 years, they've been positive. So those look a little bit better. The NASDAQ's got 6 of 7 of the last years. It was down 2018, if you're familiar with that meltdown there. Little mini meltdown, you know, but that October, November, December was rough there. The S&P has only been the best performing, on an average basis, the best performing index only 2 out of the last 20 years. It is not known for being one of the outperformers relative to the Dow and the NASDAQ. We put it off over to the left so you can take a look there. The NASDAQ's been the best performer 9 out of 20 years. The Dow, the same. S&P only got 2. Now, in terms of percentage of positivity, I think is how I want to say it. Yeah. Here we go. So we've got this here for you. The S&P is ranks with the Dow in terms of being positive in the month of November. 75% of the time it is positive, 65% of the time for the NASDAQ, probably due to a little volatility there. So that's what you have overall. Very, very high probability that November will be a positive month. And if it is a positive month, you now know the average and median returns for each individual index. If we take it a step further, here's all the data, the market breakdown by year. So we're taking a look at every single year, the numbers, so you can see how we came to some of the results that we did. If you look at the Dow, that's going to be on the first column there, and this is just the actual gain or loss in November on a percentage basis. So for example, 2000, we all know was a tough year there. The Dow lost 4.28% just in the year November in 2000. 22% for the NASDAQ, and 7% for the S&P, right? So if you take a look in there, you can see the best and worst performing years overall. You can also come down here and see how we got the data for the individual charts that we shared before. I don't know, I hope it's pretty good. Yeah, you can see some of the data there, looking pretty good. We also took a moment to highlight the best years and the worst years for the major indices if you want to take a look over there. Now, let's go a step further, because we always like to try to push it a little bit further, even if we mess up. Let's look at the individual sectors. So that was the stock market, whether you're in the Dow, S&P, or NASDAQ, right? Let's go a step further and look at the individual sectors, and I just kind of put this one as big as I could on the screen there. So individually, it's not good news for energy, by the way. You take a look at this. What we have is ranked by percent positive. The energy sector, only positive 55% of the time. That just is the worst out of the group there. Industrials are the best performer. 80% of the time it averages, or 80% of the time it's positive, averaging a 2.79% gain. The best performing sector is going to be materials in terms of returns and also positivity, if you want to take a look at that. The best median performance there comes from the industrials. And all in all, you can see November is a pretty good month. If you're breaking down the different sectors there, I don't know, anywhere from like, let's call it 1% to 3%, somewhere in there. So pretty active month for November. That's the sectors. And then this one, you're probably not going to be able to see too clearly. Hopefully you can, but that is, you can blow up your screen. This is actually every single November return in detail, so you could see how we came up with that data I think that's kind of cool to share sometimes, because instead of just throwing you averages and stuff, you're just assuming we get the numbers right. There's a good chance that maybe there's something a little off. So we include that data there for you. And what you can see is every sector is working on at least, nope, I'm sorry. You've got industrials, consumer discretionary, materials, healthcare, and we're going to have financials working on a 4-year win streak. Industrials working on more than that, as well as materials. But you got a handful of sectors that are positive at least the last 4 years there. Utilities and energy just don't seem to like the November month all that much. It's not horrible. If you look at 2014, 8% decline, that was pretty bad, but we were already up at that point. So keep in mind, energy is already down 50%. So already down 50%. That'd be kind of interesting to see which one of these years were they really bad. 2009 looks like a small gain. Anyways, that's what we have for you there. So to break it down, here are your sectors. If you want to screenshot that one, take a look at the average statistical performance. And here is the markets for November. So that's just a really, really broad but very quick overview of everything to expect in November. Was that too much? Too much? Hope you like it. All right, what else? Can we cover some more? I'll tell you what. Go ahead and post your questions. I'll try to answer them. I'm going to run through a few other quick stocks because there's some cool stuff in here you might not have thought to look at. So let's go over to the charts. We're going to go to AIG. They were in the news today. Started off with a nice pop above the 200-day moving average. Couldn't handle it. They're going to spin off their life insurance and their retirement business, which makes up about 34% of their overall revenues. That's not a small piece of their company. It's about $49 billion, so it's a lot of money. They're trying to figure out how to do it. It's probably going to take a few years still, so no rush there. That's probably what people were not so excited today. One Main Holding, One Main Financial is the name of the company. If you want to look at them, real simply, OMF is a ticker symbol. What these guys do is make loans to less than stellar qualified borrowers, right? Maybe you've been there and you had to get a loan, you didn't have good credit, or maybe spotty job history or whatever. So these guys take a lot of risk, in other words, with their the way they do loans. Charge-off ratio came in at 5.2%. Wall Street didn't care because it's the exact same amount that it was before. That's a high number, by the way. You don't want to have that normally, but it's the same amount as it was a year ago. They raised their dividends. They raised their dividend 36%. And by the way, they already yield like 8%. So it was a sizable tick up for their dividend. Delinquencies were down, whether they were 30 or 90-day delinquencies, down year over year. The issue is people that don't have great credit or don't have a lot of money are not going and getting new auto loans or personal loans. And so the number of new loans that they're pumping out fell off a cliff. And so Wall Street didn't like that one today, or at least I thought that was kind of a bad thing there. Anyways, Retail Opportunity sold off today 4.5%. This is a REIT with mostly shopping. They're strip malls and type stuff, but they're usually anchored by a drugstore on the corner, or they have a shopping center like a grocery store in the mix. So you can imagine this could have been a tough one for them overall. 96.8% of their portfolio is leased. 88.7% of the rents are paid up. I thought that was pretty good. That was above average for them. So 96.8, but nonetheless, the stock did fall on the day. Boyd Gaming, there you go. Boyd Gaming, I believe, is looking at selling off some of their property in Vegas, but all in all, stock was down 5% on the day. Revenue was down 20%, and so maybe that's what people were responding to today. And lastly, I should have put it here. Nope, we didn't do it. We'll put it over here. Hey, nope. There they go, that one. Twilio. So Twilio was in the news today because of earnings. Revenue was much better than expected. That helped because of SAP yesterday. I don't know if you saw, I pointed it out. It was down like 25%. They beat expectations by 10%. So looking good there. They made a profit of 4 cents. They were expected to lose 4 cents, I believe. So Twilio, all in all, pretty good. But a lot of these stocks in that space did pull back a little bit today. So down 5%. That's a welcome 5%. It's been a little extended, so I think that's a welcome 5%. And that's it. That's why I just want to share with you guys a little bit something different there. So I hope that helps. Earnings tomorrow. Holy cow. You got a lot of earnings coming up. You know that. We'll see what we can do to cover as much as we can. Microsoft will be on the mix as well. And then we have that election thing coming up. So we'll be seeing how to adjust there. We will see. It's definitely going to get exciting. I'll be happy when it's over. So that's what you guys want to talk about. All right, so I'll read off the things that tomorrow. You got ADP, Anthem, Boeing's the big one, General Dynamics, MasterCard, UPS, Amgen, eBay, Ford, Visa as well, and Western Digital. So that's what you have coming up tomorrow. In the meantime, you guys enjoy the rest of your day. I will wrap it up there. Hope you learned something new. Did you? If so, maybe you'll hit the subscribe button for us. Play it like a piano. Enjoy. See you later.